Now, Arthur, let's change gears a little bit. Let's talk about digital currencies, Bitcoin specifically, because for a long time, even though you had a strong interest in this, you've done 500 hours of research on this topic. You're in the game yourself. As an advisor, you weren't allowed to talk about this space at all. It was all very but now things have changed.
Things are changing.
So what's changing right now in the digital currency space?
I think you'll find, I think even for our licensee, professional indemnity insurance, that's the big thing, because no one wants to get sued, right?
Yes.
So being able to have this new advice space be incorporated in your professional indemnity insurance is really important. So I know that's happened now. Then there's just up to the individual licensees or whatever to work out how does that work for them in their particular licensee practices. Yeah.
So you're
now in a closer.
So are you now in a position where you can actually talk to your clients about digital currencies and Bitcoin?
I've been, since when I started learning about it back in 23, and then I thought, I need to learn about this before I can bring it up. I'll actually bring it up during conversations, because you'd be amazed how many people might not want to bring it up because they don't want to, because they think,
it's pretty taboo still.
Financial advisors might poo-poo that.
Yeah.
But no, I think, no, you need to know all these things, right?
And that's one of the things that I really liked about you when we first met, that you're very open. You're an open person. You're always growing and learning.
Yeah.
That's a testament to the work done with DeMartini, being open to the digital space and Bitcoin. And I think that's important when you working with someone. You want to work with someone who's got an open mind.
Stay curious, right? Yeah, stay curious, right? Because you always want to learn. So yes, that space is opening up, and from the new year, there'll be the ability to be able to offer advice specifically around Bitcoin, because it's different to the others.
Yeah.
Regulated, right? If it's in a product, because Bitcoin itself is a commodity, so that's why you can go. You see people that run businesses that help you buy Bitcoin and then store it and charge you for the privilege. And I'm thinking, how do they do that when it's not? They're not actually giving advice. And it's probably like people that sell gold, right? They don't need a license to do that. Because it's actually a commodity. The moment you wrap that product or Bitcoin, that commodity, in a product, an ETF, exchange traded fund, which makes it a lot easier to work, and people have access to these now, and then you need a license to be able to, talk about that space. So,
that's the difference. So Bitcoin itself, you don't need one because it's not an actual product.
No, that's right. But in the space that we're in, we couldn't even give advice just on it's as a commodity.
Is that right?
Right. Yeah. So So it's a little bit. It's almost like an oxymoron, isn't it? It's a commodity.
Yeah.
People can talk about, can do stuff with it outside of a licensed environment, but within the licensed environment, you couldn't advise on it per se. But now with the PI being addressed, you'll find be able to give advice in that space. So you'll probably start in the investment space. When I say investment, not in the super environment, in the investment environment.
Yeah.
In saying that, AMP for 2 or 3 years now, they've got a fantastic research investment team, and they've been the first super fund in the country to have exposure through something called a dynamic asset allocation, which does explain that those super funds their funds have performed well.
Okay.
So they're only the first at this stage, and I'm sure they'll introduce new things and exposure to that. But in the advice space, I think, as people get their PI sorted, they'll be able to advise in the investment space first. Super, who knows when that will be. Yeah. But it's a good start. It's a start.
Yeah, it is a start.
Especially when you know about it.
Yeah.
And people could be doing the wrong thing here with this, that you could offer some advice around it. That's the thing that I wanted to, been shouting from the rooftops is, people could be doing the wrong thing. So it'd be good to have someone that can advise in that space.
Yeah, 100%. Because it can be a bit of a I guess cowboys and Indians are looking for that.
Yeah. Because in the advice space, you're going to talk about institutional custodianship of the Bitcoin itself, right?
Mm-hmm.
And I know, there's a term, not your keys, not your coins, right, on exchanges or people that have wallets and so forth, which there's a place for that. But obviously with institutional money coming in, as back in start of 2024, when in the States they allowed 11 ETFs start in this space, and you only have to see what BlackRock's IBIT has been the most successful ETF in history.
And I guess it started off as more of a speculative type asset.
Yeah.
It's definitely become a lot more mainstream and more trusted.
Yes.
I feel like trust is important in anything. That's the biggest factor. But what I'm curious to know is what opened your mind to it, what drew you to it back in 2023, and why have you become more bullish yourself on it?
Yeah, that's a good question. Okay. I was looking for so in financial advice, you need to do about 40 hours of continual professional development, CPD points.
Yeah.
And I was looking for some points that was early in the year, and I came across some monochrome research, and it was authorized. It was by the Financial Planning Association. It said, yeah, you can study this and get some points for you. And it was about Bitcoin. I dismissed it too back in 2015. So yeah, let's clear that up, because I think people go through 5 stages. They go through first you dismiss it, and like everyone's against Bitcoin before you for it. Then you deny it. Where you'll say, the government's going to ban it. It's going to be hacked, right? Yeah. Then it becomes speculation, like, maybe we'll put something in there, and if we lose our money, we'll big deal, right?
Yeah.
And then you move to a technocrat or a tech play and say, no, this is like when the internet started, we can make some money on this now.
Yeah.
And then stage 5 is basically being, holy shit, excuse the French, this thing's actually good for the world. And not many people might get to that stage. I mean, I didn't need 500 hours to get to the point of thinking, actually, this will fix the money problem.
So you're obviously at that stage 5 now?
Yeah, I think so. I know there's people that have done 1,000 hours. I just couldn't imagine how much more you could learn. But it's like, let's say you go down the rabbit hole.
You do.
Yeah. So what interested me, Daniel, was having accounting background. I understood when people said, blockchain, that's like a big accounting legend. I think, okay, I know what that means.
Yeah.
And then working with software, towards the end of our career with that software business, I really understood what disruption was about, and disruption is deceptive to start with.
Yes.
Yeah. Before you know it, it's here, right?
Yeah.
And I think when I did that presentation to our BNI group on the 5 Ds, it's actually on the LinkedIn post of mine.
Okay.
On the 5 Ds, which included deception, demonetization, democratization, because all digital things everything will go digital. So why should money be any different? And if you think about video cassettes went to, we've got now streaming, right, on Netflix and music, Apple Music, Spotify. Well, once upon a time that was records, right, and tapes. Google was once the yellow pages. Now it's all online. Amazon shopping, books all online. So for me was understanding that everything will go through a digital process. So why should this industry not be any different? But I was just fascinated with Bitcoin because of its nature, that it's got scarcity, because there's only 21 million that are released.
Yes.
And I've enormous admiration for engineers now, because they understand things from a first principles basis. And, if you do this, you get that, right? There's rules in place. And, I was just fascinated in learning how this thing works. And yet it's still very early. I think it's still very early days.
Only less than 20 years, isn't it?
Yeah, I think we're in years. Yeah, it started in, the white paper was released in late 2008, early 2009. That's when it started.
So just after the GFC.
Yeah. So, yes. And I think that was
it's probably one of the big things that
came out of all that, right? Yeah. Why is it that there are people losing their jobs all around the world and everyone home, and yet asset prices just went through the roof? Homes went through, property went through the roof.
Was there any other factors that really drew you to it other than the ones you've already mentioned?
Have you read Lynn Orban's book on broken money?
No, I haven't.
Yeah.
No.
I think one of the things that you learned about Bitcoin is it actually takes you back into history and understand what money was and how it's changed. And Lynn Orban book, it's a huge read. It's a big book, but you can get it on YouTube. Like you can get a 30-minute or a 60-minute video. Understanding about why money's broken and how eventually, things don't last forever. Like if you think about it, in 1971, when the US decided like we're not going to tie money to gold, right? We've had 50 years of that, right? So 50 plus years of that. So the things do change over time, Does that help? Yeah,
it does a little bit.
A little bit. What else did I?
Because one of the things that I had a crypto coach back in 2021. Obviously the scarcity thing really made sense to me.
Yes,
I liked that how it was capped. You can't inflate it.
Can't inflate it.
And you can't dilute it because even because I'm more of a share investor guy historically, so sometimes you buy a company and if it's an earlier one, sometimes they'd raise capital, which means there's more shares issued, which means your portion is diluted.
Yes.
But that just can't, and I guess when you're printing money, it's forever getting diluted. Let's explain that can't happen. It's just
it doesn't have an inflation rate.
Yes.
And if you think that doesn't make a big difference, like gold inflates at about 1.5%, say 2%. So in the book we've got something called the rule of 72. So if you put a number into the rule of 72 and tell you how long before something either halves in value or doubles in value. And so what inflation, so we have this thing called CPI, which is a basket of goods. And unfortunately that basket of goods has changed over times, and it now probably has, a lot of, wouldn't call it very high quality products in that thing. But try going to the supermarket and buying, fresh vegetables or, nice cut of meat and so forth. So the real rate of inflation, monetary inflation, is probably somewhere around 7%. So if you put 7% into the rule of 72, it means every 10 years things are either doubling, or in this case, halving. So if you had 100K sitting in a bank account not earning interest, that's why we use this term melting money's like ice melting in your hands. In a 10-year period, it in effect is worth $50,000. So your share of the world's worth has just been diluted.
And I guess that's why it's like the hidden taxes, and you can see.
And the fact that Bitcoin doesn't have this inflation rate means 0 into 72 means it's infinity. It'll be like that forever. So I think, just going back to that was the thing that really persuaded me to re-look at this better.
What about, because it's obviously different to traditional like businesses or property, for example. Obviously there's capital appreciation and you have cash flow as well. And cash flow is how you can value things. You can work out the current present value of it. But with Bitcoin, because it doesn't have the cash flow component, this has always been the hardest thing for me to grasp around, because I kind of see it as a storage of value, and because of the scarcity and other factors, there's only one way I really see it going. Unless a black swan event happens. But what are your thoughts on that? Because you can't actually value a Bitcoin other than what the market's currently saying. What are your thoughts?
And you're right, because businesses are valued on future cash flow. And by the way, it is future, right? And yet we seem to trust that those numbers are going to be correct, right?
That's true.
And so, look, this definitely turns everything on its head. There's no doubt about that. It's almost like it's monetary engineering for the future of money. But in essence, if you think if Metcalfe's law is about the more people
in a network,
as it grows, it becomes more powerful and more valuable.
Yes.
And I think that's the way to try to think of Bitcoin, that it's becoming more powerful and valuable because of the amount of people joining the network.
Yeah, and that was actually the second factor that drew me in, because I understood that law and I was like, this makes, and that's why I said earlier on trust.
Yes,
because the bigger a network gets, the more trust is within the network as well. And once there's a lot of trust, then it becomes very valuable, even if there isn't cash flow per se.
Anyway, like things start off as collectibles. Like once upon a time, we had, shells and coins and so forth. Bitcoin's moved from a collectible to a store of value. How long before it becomes, currency, a unit of account and so forth? Could be a long time, But right now, it's serving its purpose as a store of value.
Yeah, and that's exactly how I kind of think of it as a store of value, more so than a commodity or an actual currency itself, which I guess I actually haven't read the white paper myself.
It's not long. It's only like a page or so.
Okay. So obviously, it's not currently being used how the white paper described, though, is that?
Yes, you're right. Yeah, because eventually they want it to be a peer-to-peer network, don't they? So, and you can use that, but I think Bitcoin is the base layer, and then on top of it, they'll put on layers like layer 1, layer 2. Yeah. Like layer 1 is like the Lightning Network, and so that will allow, fast transactions at, very little cost. So, but that base layer does need to remain solid as a foundation, and then they'll build things onto it, right? Just like the internet had things built onto it.
Okay.
Well,
one thing I'm curious to know, and where does this sit? 'Cause I was reading your book again this morning, Arthur, and there's a particular pyramid in here which is all about how you build wealth.
Yes.
You build in layers. So at the bottom of the layer, you have more or less risky assets, so cash reserves.
Yeah.
And then you build it up in foundations.
Yes.
And the idea is that you to build something that's going to last, or is going to endure, you need strong foundation.
Yes.
A lot of times people skip foundations and they go straight to higher risk assets.
Yeah.
But what happens during tough times is the pyramid collapses.
Yeah. Yeah.
Now, what drew my curiosity is because, this was a while ago when you first did this triangle.
Yeah.
And at the very top of the pyramid was Bitcoin, which was more of a speculative asset.
Yes.
At that time. I'm curious to know how this has changed in your mind in 2025, this wealth pyramid that we have. And where should people be prioritizing this on their journey of building their financial pyramid of wealth?
We didn't start off with not giving financial advice here.
Okay, disclaimer, this isn't financial advice, this is educational conversation and curiosity.
Well, it's interesting, isn't it? Yeah, because I think at some stage I popped it at the top of the, we'll call it the investment pyramid, as speculative, and low at the bottom we had like yourself, your career, and then you have things like cash, fixed interest bonds.
By the way, do you have a digital copy of this book?
Yes. Online.
If you can send it to me, we'll put it in the show notes down below, because there's some really valuable stuff here as well.
Yeah, happy to, mate. Yeah, happy to. And I think this is part of what we're talking about is the, stealth, call it whatever you like. If you're not earning much interest or very little, and if monetary inflation, which is inflating at 7% a year on average, if you're only getting 1%, 2%, 3%, 3.5%, 4% for term deposits. The difference between, and you now understand why it's really hard for younger people to save money.
Yeah.
If they're only getting 3 or 4% and things are going up at 7%, they've got no hope.
No.
Right?
No.
So you need to really think, what does that mean? And that the difference between that 3 or 4% and 7%, you're just, whether you call it stealth, whether you call it a wealth tax, but in essence, we're inflating your inflating debt away. I mean, governments around the world, if they've got $1 trillion worth of debt and they can inflate it 7% a year, in essence, in 10 years' time, it's worth half that amount, right? That's how we use this term, inflating the debt away. So you really need to be cognizant of the fact that, yes, you need to have we need reserves, for, day-to-day living, and then some reserves in case of a rainy day.
Yeah.
Of course, right? And then another layer of some, money at that stage. But at the moment, growth assets are the things that are going up in value, aren't they? People with property, shares, and so forth.
And if you don't have those, life is pretty. If you don't have assets working for you, life is pretty tough.
It's really tough, yeah.
Especially right now.
Why people want to get into the property market, right? Yeah. I think what I'll say about that is I was at the end of Gen X, but with baby boomers, they've benefited really well from property, right?
Yeah.
And younger people would be thinking, oh, we don't have that. You know what you've got? I think something greater, and it's Bitcoin. I know we can't live in a Bitcoin, right? And
that's true.
But I am hearing of people that are using this, as long as I think you've got, again, timeline, right? You're not going to buy some Bitcoin at the start of the year and now it's volatile, right? But if you've got a long enough time horizon, I think the records show that if you keep it for 4 years, you'll make it look like you won't lose your money, right? Yeah. I think they can show that. That's with 16 years worth of data, they can show that now. So we've got to have a longer time horizon for stuff, and different to having shares and so forth, right?
Oh, you've got to have a long-term mindset.
Long-term time horizon. And then if you say you should turn the computer off or close your laptop and not look at it for 5 years, right? So I think all these principles apply. So if you've got some cash and you've got some term deposits money, and then we all know you need growth assets, otherwise you're going to get left behind.
Would you be prioritising, again, not financial advice, but accumulating some Bitcoin before, say, an index fund that might track the Aussie or American market? Where would you have that at the moment?
Yeah, that's a good point. Well, I know you can get a little bit of Bitcoin exposure within AMP Super at the moment, right? But there's, for investing purposes, well, look at the returns. The returns in the last 4 or 5 years have been, is it 40 to 50%, maybe on average?
Do you want me to tell you some interesting stuff?
Yeah, go on.
Because it was 10 years since I started my investing journey, I was diving into my numbers. So I looked at the exact per annum returns on a few different things in the 10 years I've been investing.
Yeah.
So my portfolio had just done over 25% per year, which was pretty good.
Yeah.
VMS, which is an ETF that tracks the Australian market.
Vanguard,
had done 14.41%, I believe, over the last 10 years since I'd started.
Yeah.
VTS, which tracks the US market, had done 28% per annum.
Yeah.
Which, again, so that's sensational. There's been some big tech players there as well.
Yeah. And then the magnificent seven, right?
Exactly. Yeah. And then I was curious. I was like, I wonder what Bitcoin's done over that period. But again, remember 10 years ago, this is 2015. So Bitcoin was only about $400 at that stage.
Yeah.
But it returned a ridiculous 2,204% per annum.
Crazy in that time.
It's just ridiculous. I mean, not many people would have been in it then and been holding on. So and that's not sustainable long term, but it's just like, fine, that's...
Yeah, it's becoming less volatile, but the returns, I think, are in that 40 to 50% range. Mind you, it's obviously being quite volatile at the moment. Yeah. But back to answer your question, Daniel, I think with, being able to advise in this space, it'll be treated as a portion of a portfolio, right? Diversification.
Yeah. Do you think it will sit above or below the index fund space?
As in risk?
Yeah.
Well, right now it's probably treated as a high risk.
Yeah.
Right?
This is your personal view. Now, in your personal view, is it higher risk than an index fund or equities?
I don't think so, but that's my personal view.
And yeah. And again, you've done a lot of research.
I've done a lot of work.
And got skin in the game.
Yeah. But then time horizon, right?
Yes.
Yeah, don't go doing something like this now and then tomorrow you want to pull it out, right?
Actually, I think that time horizon is interesting because if you don't mind me asking, how old are you now?
I just turned 60 earlier this year.
Big 60, so a big milestone.
Yeah.
Now, for most people at that age of 60, even thinking about Bitcoin, that would be far too risky for most people. But you are an advocate of it and putting your money where your mouth is as well. How come you're still really into it even at your phase of life?
I think the curiosity and learning something about the history of money and why it's broken and it does need to be fixed. And I'm quite passionate. Look, it's almost like, mate, I came for the money, I'm staying for the revolution sort of thing.
So for you, it's more the actual...
It's not a money. Of course, money is important, right? But for me, it's more than that now.
Yeah.
You know, you could argue someone could, would retire at 60, but I almost feel like this is almost like another, and yet our business has only been running for 10 odd years. We've been in the industry for 14. You could argue, well, why wouldn't you retire and what that, and it doesn't seem like long enough, but I just feel really strongly about the next, kicking the can down the road with the next generation with the debt and all that stuff. And I just feel that this Bitcoin will fix the money problem. It might take a long time. So partly curiosity, and for me, it's more than that now. I just think it's really important.
Yeah.
But I was curious. I think when I learned Bitcoin, you'll be able to borrow against it. That for me was a real aha moment. And because I think in the States already now they're starting to talk about the custody of Bitcoin, and you watch, it'll only be 6 months before there'll be conversations here in Australia about how do we do that, So yes, it is a bit odd that someone my age bracket has an interest in it, but having read and, the history of money, it's more than the money. I think it's really important to...
Yeah. I agree. It's a revolutionary idea and philosophy, and it's giving people opportunity. And again, like, I guess like my father's generation, property was the vehicle. A lot of people did very well. Yeah, and it's just not a thing for young people these days. But I've even heard of property experts. It's actually one of the CEOs I've interviewed on here before, talking about actually, if you do still want to get into property, for example, but just using Bitcoin as an accelerated savings vehicle to get there, because otherwise you're just not ever be able to get into it.
We're seeing that now. We're seeing young people invest in Bitcoin as long as they've got that 4 or 5 year window to allow them to be able to save enough to get into the property market. So yes, mate, I think it's really important. And look, I think there'll be a place for it in most portfolios, as long as the clients, are okay with that. But again, there might only be a small portion, whether it's 1, 2, 5. I don't think it'll be more than 10% to start with. But, if something's growing at 50%, at that 10% allocation will definitely have to be rebalanced at the next year, right?
Again, because going back to the rule of 72, your money's doubling very fast.
That's super fast, right? Yeah.
And again, that's not sustainable long term.
No, it's definitely slowing down, right? Yeah, it'll definitely slow down. See, what you have to remember, so the world assets sitting at around $1 trillion US, and that's divided up into real estate, shares, bonds, currency, and so forth, right? Gold is, I think, because of its recent move around the close to 30 trillion. Bitcoin is only at 2 trillion.
And gold at 30 trillion. Yeah. There's a lot of
money, so it was almost like a 10.
Yeah.
So if Bitcoin is digital gold or digital property, just like a venture capital firm would look at, what's the total addressable market, and what do we think we could get if we get this business running? Can it go from 2 trillion to 20 trillion? That's 10x, right? Could it go to 200 trillion, which is 100x? And that's, okay, then that's a larger share of the total. But over time, if things still keep inflating at 7%, that 1 trillion in 10 years' time could well be, one quadrillion, right? 1,000 trillion, yeah?
Big numbers.
Big numbers,
right? Hard to head around.
So if you look at it from that aspect, you can see it growing. Like, is it better than gold? Well, digital gold for lots of reasons, It's divisible into, like, each Bitcoin is split up into 100 satoshis.
I like that about it.
Yeah, which means you don't need a whole one, right? You can start at a lower level.
Yeah. That's what sometimes people misunderstand. They think that you need to buy one at a time.
No,
you can buy 0.0001 if you want to.
Exactly, yeah. So I think it's still very early days, yeah.
Well, it's going to be fascinating to see how this journey unfolds, because it really is just the beginning of this, I guess, revolution in this new age of money and finances and investing. And I really like that there's people like yourself out there who are on the front foot knowing this stuff, so that you can advise your clients wisely and help them with their decision making. So I'm really curious to know, Arthur, because I've thoroughly enjoyed this conversation and the work that you do.
Thank you, man.
And like you said, if we can put a link to that book in the show notes.
Yeah, definitely.
Where else can people follow your journey or potentially inquire about you and
well, traditionally, like the website, which is fmgws.com.au.
I'll put that down in the link.
Debbie's been good with stuff on Facebook, Instagram, and a little bit on LinkedIn. I think we'll increase some of that, because I think for our practice over the next 12 months, it'll be educating our clients with the different things that are happening in this space. So, yeah. Well, I mean, we do a great newsletter, but you've got to jump on, on board and register for that. Website, newsletter, MailChimp newsletter, but the socials, whether it's Facebook, Instagram, and I could be doing a little bit more on LinkedIn, I'm sure.
Okay, all right.
Yes, mate.
We'll put some of those links in the show notes down below. But Arthur, I just really want to show my appreciation to you. I'm grateful that we're here having this conversation, grateful that we've been connected these past 12 months, and wishing you and the family and the business and your Bitcoin Nation all the best this coming years, mate.
It's been a pleasure being on board with you, Daniel.
Thank you. I've enjoyed this conversation.
It's been great. Thank you.